Good day, ladies and gentlemen. This is KB here. Okay, so today I'll be talking about basic market structure. Okay, so what does the basic market structure look like? As you all know, we have two type of trends and then one consolidation. Okay, we have two type of trends. So the first one is the bullish market, which is the uptrend. So it goes like this: higher low, higher high, a higher low, then a higher high, a higher low, a higher high, a higher low, a higher high, and so on and so forth. Okay. Then we have the second market structure, which is the bearish market. Okay, which is the downtrend. So lower high, lower low. Okay, lower high. Sorry, yeah, lower high. Then we have a lower low here. Lower high, lower low. Okay, lower high, lower low, and so on and so forth. Okay, so this is basic market structure. Then we have another one called the consolidation, and consolidation simply means when market is not ready to move up or not ready to move down. Okay, so in most cases you see something like this. Okay, market just doesn't want to move, it's just consolidating in one area. Okay, forming liquidity and all that. So this is consolidation. Market is not moving to break the upside or to break the downside. So this is consolidation. Okay, it's not exactly like this, it comes in different form. Consolidation just means the market being stagnant. Okay, so it won't look as perfect as this. Okay, so in an uptrend, okay, in an uptrend, what makes an uptrend is because of something called higher highs and higher low. Okay, give me a minute. Okay guys, so as you can see in this diagram, I have HH. Okay, so HH means higher high and higher low. So in a bullish market, the most recent high is the higher high. Okay, and the reason why this is called a higher high is because this high is higher than the previous one. Now this is a higher high, then a higher low. Okay, now this is another higher high, and the reason why this is called a higher high is because is is this high is higher than this high. Okay, so when market breaks this current high, okay, when market breaks this current high and give us a new high, the new high is called a higher high because the high is higher than this one. Then when the market, okay, let's say from this high market retraces back and breaks this previous high, okay, giving us a new higher high, then we have a new higher low. Okay, the lowest part of this move is called higher low, so long as it doesn't break this one. Okay, are we good? Yeah. Okay, so we have higher low, higher high, because this high broke the previous higher high. So we have a higher low because this low is higher than the previous low. Then this higher low put on a higher high that is higher than the previous high, then gave us a higher low that is higher than the previous low. Okay, so that is how it's being done. And the same thing goes for the bearish market. You see lower high, lower low, lower high, lower low, lower high, lower low. So this is how it's being done. So another thing about basic market structure is something called change of character. So for example, the market might be bullish or bearish, then market change character, and all of a sudden the market just flips to the opposite side of the trend. So how do I see, and how do I let me create a visual representation for you guys. Okay, let's say the market is bullish, higher high, higher low, higher high, higher low, higher high, higher low, higher high. then market gives us a lower low instead of a higher low. If it's a higher low, market is supposed to do something like this, okay? But instead of market doing this, market did something like this, breaking this previous low. So market did something like this, okay, giving us a lower low, then a lower high, lower low, lower high, lower low. Now what happened here is that market changed character. Market changed character, which means from being bullish, market became bearish. Okay, so we call it change of character or market structure shifts. Okay, I have it as MSS here, which is market structure shift. So market was bullish. So market was bullish. Okay, then all of a sudden market became bearish. Okay, you can see that the market is crashing down. So market was bullish. Okay, market was going up, then market started going down. So we call this a change of character. The reaction, what causes the opposite trend to start, is called MSS or chalk, known as change of character or market structure shift. So this is all about basic market structure. I hope you guys understand, and I hope you guys enjoy the video. Have a nice day, and make sure you subscribe, like and follow, okay? And make sure you also comment to the video, and if there's anywhere you want me to improve, please let me know your opinions in the comment section. Have a nice day.